The smartest traders in the room are often the worst performers. Not because intelligence hurts, but because in trading, intelligence without patience is just a faster way to rationalize bad decisions. Think about that for a moment. The analytical trader who can read a chart beautifully, construct a compelling macro narrative, identify confluence across multiple time frames, and articulate exactly why a move is coming, that trader still blows accounts. Regularly, consistently, for the same reasons as everyone else. The moved stop, the forced entry, the revenge trade, the oversized position after a loss. None of those behaviors have anything to do with how smart the trader is. They have everything to do with whether the trader can wait, absorb discomfort, and follow a plan when every emotional impulse says to deviate from it. Intelligence solves the analysis problem. Patience solves the execution problem. And execution is where the money actually gets made or lost. The analysis is not the hard part. The waiting is. Here is something most people entering trading do not expect. They assume the market will reward whoever understands it best. That the trader with the deepest knowledge, the most sophisticated framework, the sharpest analytical mind, will naturally rise to the top. That assumption is wrong, and discovering it wrong is one of the more humbling experiences available in financial markets. The market does not pay for understanding. It pays for correct action at the correct moment. And correct action at the correct moment is a function of behavioral discipline, not intellectual capacity. You can understand exactly why a market is going to move in a specific direction and still lose money on the trade. You could be right about the macro, right about the structure, right about the timing, and still lose money because you entered too early, size too large, moved your stop, or cut the winner before it reached the target. Every one of those execution failures is a patience failure, not intelligence failure. The market does not grade on understanding. It grades on behavior. And behavior under pressure is a different skill entirely from analysis under calm. Let us look at what intelligence actually does in a trading context. It helps with pattern recognition. It helps with understanding the mechanics of why price moves the way it does. It helps with building a logical strategy that has genuine edge. It helps with backtesting and reviewing and refining the approach. All of that matters. None of it is useless, but all of it happens away from the live market. In the planning phase, in the review phase, in the calm space of preparation where there is no price moving in real time and no money on the line in the moment. The moment the session opens and a real position is in play, intelligence largely steps aside. What takes over is the emotional system, the nervous system, the deep biological wiring that processes threat and reward in ways that were never designed for financial markets. The brain that built a brilliant analysis and the brain that manages the trade are not operating the same way. The analytical brain is deliberate, calm, sequential. The in-session brain is reactive, threat-sensitive, and deeply influenced by the immediate experience of gain and loss. Intelligence gives you a great plan. Patience is what lets you follow it when the plan gets uncomfortable. And the plan always gets uncomfortable. A trade moving against you before reversing is uncomfortable. The entire strategy depends on holding through that discomfort. But the brain that is experiencing the unrealized loss in real time does not care about the strategy. It cares about stopping the bleeding right now. A winning trade, pulling back before reaching the target, is uncomfortable. The brain wants to lock in the profit before it disappears. The strategy says hold. The discomfort says take what you have before it is gone. An empty session with no setups qualifying is uncomfortable. The brain that has been sitting at the screen for 2 hours wants something to happen, something to justify the time, something to do. None of these discomforts require more intelligence to navigate. They require more patience. The willingness to feel the discomfort without letting it drive the decision. That willingness is not a cognitive skill. It is a behavioral one. And behavioral skills are trained through repetition, structure, and the slow accumulation of evidence that the discomfort, when tolerated correctly, produces better outcomes than acting on it does. The most intelligent traders often struggle the most with this part, not because they lack discipline, because their intelligence gives them a specific tool that patience does not need, but impatience loves: the ability to construct a compelling justification for any action. An intelligent trader can tell you exactly why this particular situation warrants moving the stop, why this specific session justifies taking a setup that is almost but not quite at the criteria, why the confluence on this trade is strong enough to justify slightly larger size than the risk rules specify. The arguments are not stupid. They are smart. They are sometimes even correct in isolation. But the pattern of making those arguments consistently in the direction of giving in to whatever the emotional system is pushing for is what destroys accounts. Not any individual argument. The pattern. A less analytically gifted trader who cannot construct those justifications, who looks at the setup and simply checks whether the criteria are met without the ability to build a case for why an exception applies, often outperforms the brilliant trader simply through the absence of the rationalization skill. Stupidity cannot justify a forced trade convincingly. Intelligence can, and that justification is what gets the trade taken. This is the specific way that intelligence becomes a liability in trading. Not by producing bad analysis, by producing convincing reasons to deviate from a correct plan. Patience does not build cases. It does not negotiate with the criteria. It does not ask whether this particular situation might warrant an exception. It simply observes whether the conditions have been met and acts only when they have. No argument required. No justification necessary. The setup either qualifies or it does not. Think about what trading actually demands of a person, moment to moment, during a live session. It demands the ability to watch a market move in the anticipated direction without having a position and not chase it. It demands the ability to watch a trade move against you by a painful amount before reversing and not close it early. It demands the ability to watch a winner approach the target, pull back slightly, and not exit just because the partial retreat felt threatening. It demands the ability to sit at a screen for 3 hours without a qualifying setup appearing and not manufacture one out of the price action that is available. None of those demands have anything to do with understanding markets. They are entirely about tolerating specific forms of discomfort without letting the discomfort drive the response. That is patience, specifically applied. The ability to feel the pull and not follow it. The ability to observe the emotional system generating its signal and classify it correctly as noise rather than information. The ability to be uncomfortable and act on the plan rather than on the discomfort. This does not come naturally to most people. It especially does not come naturally to analytically gifted people who are used to solving problems by thinking harder about them. You cannot think your way through the discomfort of a trade moving against you. You can only have established, before the trade was entered, clear structural reasons for the stop placement and a genuine acceptance of the loss amount if the stop is hit. Then you wait. The thinking already happened. In the pre-session planning, in the strategy development, in the backtesting. The session is not the time for more thinking. The session is the time for following what the thinking already produced. The traders who have been doing this successfully for years have figured this out in a way that often surprises newer traders. They are not constantly analyzing in real time. They are not making sophisticated in-session decisions. They are following a plan that was built when they could think clearly, and they're doing almost nothing during the session itself except waiting and then executing when the conditions are met. The sophistication is in the preparation. The session is simple. Wait for the criteria. Enter when they are met. Follow the plan to stop or target. Log it. Done. That simplicity is not accessible to the trader who believes that in-session intelligence is the edge. For that trader, every session is a new analytical challenge. Every piece of price action is information to be processed and responded to. Every movement is a potential signal. The result is overtrading, overanalysis, constant reevaluation of a plan that did not need to be reevaluated because it was built correctly in the first place, and the constant deviation from the plan that reevaluation almost always produces. Patience at full development makes the session boring. in a way that is deeply uncomfortable for anyone who assumed trading would be intellectually stimulating in the moment. The stimulation is in the preparation. The session is maintenance. Let's talk about how patience is actually built, not as an aspiration, but as a practice. The first step is understanding what you are actually waiting for with enough specificity that the waiting has a shape. Patience is not generic waiting. It is waiting for a specific thing, and the more specific the thing, the easier the waiting becomes. If the plan says wait for a pullback to a specific zone and a rejection candle at that zone, the session becomes a simple observation exercise. Has price reached the zone? Has the rejection candle appeared? Every candle that passes without those two things is just more waiting. There is nothing to decide. The impatience only gains traction when the plan is vague enough to make the decision fuzzy, when the criteria could plausibly apply to several different situations, when there is room to argue that the current price action is close enough. Specificity removes the argument. There is nothing to argue with when the criteria are concrete. Either the zone was reached or was not. Either the candle pattern appeared or it did not. The second step is logging every session honestly with a specific focus on two categories: setups that fully qualified and were taken, and situations where a trade was taken without full qualification. After 30 sessions of honest logging, patterns emerge that are impossible to argue with. The qualified setups perform one way. The compromised entries perform another way. That data, in the trader's own account, makes the case for patience in numbers rather than in principles. Principles are easy to override in the moment of pressure. Data from your own account is harder to dismiss. The third step is building what might be called a patience trigger into the pre-session routine. Before every session, explicitly state what a valid setup looks like today. Write it down. Then explicitly state what the plan is if no valid setup appears. The plan should be: close the platform, log the session as a disciplined success, come back tomorrow. That pre-committed response to the empty session removes the decision from the live session. The decision was already made. If nothing qualifies, the platform closes. There is nothing to negotiate. The fourth step is reframing what a successful session actually means. Most traders measure session success by whether a profit was made. This is the wrong metric entirely, and it is what makes patience so hard to maintain. A session where a valid setup appeared, was taken correctly, and hit the stop is a more successful session than a session where two forced trades happened to be profitable. A session where no valid setup appeared and no trade was taken is a more successful session than a session where an unjustified entry produced a win. Winning and trading well are not the same thing. They correlate over large samples. They diverge constantly over individual sessions. Measure the session on whether the plan was followed, not on whether money was made. Follow the plan consistently for long enough, and the money follows as the natural consequence. That reframe is not easy to make stick. It fights against every natural instinct and every conventional understanding of what trading results should look like. But it is the reframe that patience requires. Because patience in service of profit on any given day is conditional patience. It bends whenever the profit is not materializing fast enough. Patience in service of process compliance is unconditional. It holds regardless of what any individual session produces, because the metric being optimized is not the individual session result. There is something important to acknowledge here. Building patience does not mean eliminating the discomfort. It means building the capacity to function correctly despite the discomfort still being present. The experienced trader still feels the pull to enter early, still feels the discomfort of watching a move develop without a position, still feels the urge to close a losing trade before the stop is hit. The difference is not that those feelings disappear. The difference is that they are no longer given decision-making authority. The feeling arrives, it is noted, and the plan is followed anyway. That gap between the feeling arriving and the action being taken is where trading skill actually lives. Not in the analysis, not in the strategy, in the space between the emotional signal and the response to it. Patience is what fills that space. the practiced ability to feel strongly and act correctly. No amount of intelligence creates that space. Intelligence can understand why the space should exist. Patience is what actually exists in it. Here is the final thing worth saying directly. The traders who last, the ones who are still here 5 years in, 10 years in, building accounts steadily while everyone around them cycles through the same patterns of progress and blow up, are almost never the most analytically gifted people in the room. They're the most patient. They found a simple, logical strategy with a genuine edge, and they executed it without deviation through losing streaks that would have sent most traders back to the drawing board. They sat through sessions with nothing to do and did nothing. They held trades that moved against them to their stops without moving the stops. They held winners to their targets without cutting them early. None of that required exceptional intelligence. It required the specific, trained, repeatedly tested capacity to wait, tolerate discomfort, and follow a plan in the moments when everything about the in-session experience is pushing for a different response. That capacity is available to anyone. It does not require a certain kind of mind. It requires a certain kind of practice. The practice of specificity in planning. The practice of honest logging. The practice of measuring sessions on process rather than profit. The practice of building rules that intercept the worst impulses before they reach the execution. Intelligence can help build the strategy. It cannot build the patience. Only time, repetition, structure, and the honest accumulation of your own evidence can do that. Stop trying to outthink the market. Start trying to outweight it. The analysis was probably fine. The waiting is the work. Let us go into something that does not get discussed enough. The reason intelligent people struggle specifically with patience in trading is not just rationalization. It is expectation mismatch. Smart people have generally succeeded by applying their intelligence to hard problems. The harder the problem, the more thinking it required, the more the intelligence gap showed up as an advantage. Their entire history of achievement is a record of intelligence being rewarded. Trading appears, on the surface, to be a hard intellectual problem. Markets are complex. Price action is nuanced. The variables are numerous and dynamic. The natural assumption is that applying more intelligence more rigorously to this problem will produce better results. And the first few months often seem to confirm that. The intelligent trader learns fast, picks up concepts quickly, builds a framework that sounds coherent, takes some trades that work out, and attributes the wins to the quality of the analysis. Then the losing streak comes. And the intelligent response to a losing streak is to analyze it, to find what was wrong, to build a better framework, to think harder. But the losing streak was not caused by insufficient thinking. It was caused by execution failures that had nothing to do with the quality of the analysis. Stopped out on valid setups due to normal variance. Forced entries taken outside the plan. Stops moved in the wrong direction. Winners cut early. More analysis does not fix any of those things. More patience does. But the intelligent trader does not reach for patience first. They reach for analysis. They rebuild the strategy. They add criteria. They study more. They read more. They watch more content. They are applying the tool that has always worked for them to a problem that does not respond to that tool. Months pass. Years sometimes. The strategy has been rebuilt half a dozen times. The account has been funded and blown more than once. And the same execution failures keep appearing because the tool being applied, intelligence and analysis, was never going to address the actual cause. The actual cause was always patience. The willingness to execute the existing strategy without modification when it was uncomfortable to do so. The discipline to hold the stop when a trade moved against it. The capacity to sit in an empty session without creating a trade out of nothing just to feel productive. None of that required a better strategy. It required a different relationship with the waiting. The moment that truth lands, and it lands differently for every trader, something shifts. The search for a smarter approach gets replaced by the search for a more patient one. The strategy development gets deprioritized in favor of execution development. That shift is often the inflection point between the traders who eventually make it and the ones who do not. Not because intelligence stops matching, but because once patience catches up to intelligence, the intelligence finally has something worth expressing. The brilliant analysis is actually executed correctly. The well-built strategy is actually followed through its uncomfortable periods. The edge that was always there in the planning finally shows up in the results. Intelligence without patience is potential that never converts. Intelligence with patience is an actual edge. Build the patience first. The intelligence was already there. Let finally have the behavioral foundation it needs to produce real results. Here's a question worth sitting with honestly. When was the last time a losing trade happened because your analysis was genuinely wrong? Price went somewhere you genuinely did not see coming, in a way that no reasonable reading of the chart would have anticipated? And when was the last time a losing trade happened because the analysis was right, but the execution broke down? You entered too early, or chased, or moved a stop, or sized too large, or revenge traded, or forced something in an empty session. For most traders, the honest answer is that the second category is dramatically larger than the first. Most losses are not analytical failures. They are behavioral failures, patience failures. The analysis that exists in the plan, built calmly before the session, is usually sound. What fails is the execution of that plan in real time when the emotional system starts generating pressure. If most of your losses are behavioral rather than analytical, the solution is behavioral rather than analytical. More strategy work will not fix a behavioral problem. Only behavioral practice, structure, and patience will. This is the data most traders are carrying, but have never organized clearly enough to see the pattern. Start organizing it. After every loss, one honest sentence. Was this an analytical failure or a behavioral failure? Did the market do something genuinely unpredictable, or did the plan get abandoned under pressure? Keep that record for 2 months. The pattern will be unmistakable. And once it is unmistakable, the direction of the work becomes obvious. Not more analysis, more patience, more structure, more honest commitment to the plan that was built when the thinking was clear. That is the edge that has been sitting and used while the strategy was being rebuilt for the 5th time. The strategy probably did not need rebuilding. The behavior did. There is a specific type of patience that is worth naming separately because it rarely gets discussed. Most conversations about patience in trading focus on the intra-session kind. Waiting for the setup to trigger, not entering early, holding through the discomfort of an open trade moving against you. That kind of patience matters enormously. But there is a longer time frame version that matters just as much and is far more underappreciated. It is the patience to let a strategy prove itself. Every strategy with a genuine edge has a minimum sample size below which its results are essentially meaningless. Below that sample size, the win rate, the average win, the average loss, and the overall expectancy are all subject to so much statistical noise that drawing conclusions from them is unreliable. That minimum sample size is usually somewhere between 100 and 200 trades, depending on the win rate and the trade frequency. Most traders never accumulate a clean sample of that size on a single strategy. Not because the trades do not happen, because the strategy gets changed before the sample is large enough to mean anything. A losing streak of 10 trades arrives. The strategy looks broken. A tweak gets made. The next 10 trades go better. Another tweak happens. Another losing period comes. Another modification follows. After a year of trading, the trader has not traded any strategy for long enough to know whether it works. They have traded dozens of partial samples of slightly different strategies, and the aggregate result is noise. The intelligent trader rebuilds the strategy. The patient trader runs the strategy long enough to actually find out whether it works. This requires a specific kind of patience that is genuinely difficult. The patience to keep executing a strategy through a losing streak without knowing for certain whether the losses represent normal negative variance within a profitable strategy or a genuine breakdown of the edge.